Good morning, crypto traders and investors. Been a while since I've been on YouTube, and I wanted to pay you guys a visit. Looking at DeFi coins, or at least a small selection of them. The selection I'll share with you is going to be Chainlink, Band, Maker, Comp. I may get some of these names wrong, to be honest. Kyber, KYC, AMPL, Cava, SNX, LRC, SXP, and ZRX. As most of you know, the DeFi space has been really hot. The charts have been hot. Gains have been awesome for those that have been devoted to trading them. And to be really honest, I personally haven't been very aggressive on them, largely because I don't like many charts in the space, and we'll get into that. But before we do that, I want to make sure if you're new to watching one of my videos, you have my perspective, you understand my perspective, which is based on the Elliott wave theory as sort of a road mapping perspective. It's not the only way I trade, but it's where I start with most charts just to get a perspective on whether I have high probability viewpoint or not. And you can read up real quick on the Elliott wave theory online pretty easily. I don't actually look at projects, which some of you guys may simply turn this video off hearing that. Well, it's not that I don't look at them, but I don't make decisions on what I trade based on projects. I'm not here to invest in projects when it comes to my trading. I'm here to make money. And the only direct feedback that I use is price and how price is moving. And that's very strange to a lot of crypto investors who get excited about projects, go all in, and sometimes to their benefit, sometimes to their loss, unfortunately. And I just teach otherwise and do otherwise, and I do the same thing with trading regular markets. In fact, a lot of the markets I do on with a mix of Elliott wave. On the stock market, I use a mix of Elliott wave and a lot of other mathematical tools to try to get out an edge. And honestly, I don't even look at the economy, don't look at the coronavirus, which is one reason, which had me no qualms about being long for much of this year. I ignored the virus and just looked at price. And a lot of people looked at the economy and the virus and decided to get out of stocks. So I want you to at least consider this mode of trading because it at least uses a very direct feedback loop versus indirect stuff like what's going on in a project. And you may disagree, but I assure you I will do well over time. Okay, so I picked these looks like it's roughly 12, maybe about 10 to 12 DeFi. They may not be the best, and I picked these based on what my subscribers have asked for and on my service at Elliott Wave Trader that have asked for time and time again. So that's my basis. While I read up on DeFi as much as I possibly can, I have so little time to do that. So we're going to start. We'll get started, and if there's a coin that you wanted covered, I'm sorry, but I thought I would choose these based on what I'm aware of. All right. So the first one, I think the first one we look at is the king, really, of the DeFi space right now in terms of its behavior. I would say in terms of its popularity and its sentiment. Okay, and so that's obviously Link, Chainlink, LINK. I'm going to confess again, because of the Elliott wave theory. And this is where you have to use the Elliott wave theory in the right way. I haven't been holding this one at all. Why? Because Elliott wave has this as a very large diagonal. And when it's a diagonal is where the waves are overlapping. And if you look at it, you can see that overlap. Granted, it has a huge range in that overlap. Okay, so the lows to the troughs to the peaks are a really nice range. And it's in a nice uptrend. But the problem with the diagonal is that Elliott wave actually becomes a little bit useless. Well, not useless, a little bit more difficult in terms of finding entries and exits. And rather than me just saying, okay, it's bullish, I'm going to go all in, I really pay attention to my entries and exits. It puts me in a very low risk to trading, and I just don't experience the giant drawdowns nearly as much as a lot of traders I know, or especially those that are new to trading. I use the Elliott wave theory to define my risk, and when the Elliott wave theory perspective is not clear, I tend to avoid a chart because I can make money on any chart. I don't need an aggressively bullish chart like Link to make money. It just isn't needed. And so a lot of that, again, may be a very strange perspective to you. But it is a diagonal, and I've held a perspective that it could come into a top in this area. You can see that in the white count. And when it comes into a top, it should be that wave one that brings in that deep wave two. I don't think that's necessarily the case right now, but I'm at least watching it. Okay, still, I think there's a very good chance that we see 3. Both of these, it has actually, the white is actually more typical structure for a diagonal, but because we broke out of the channel defining that white count, which is this line down here, I have to at least hold it. Somewhat unlikely that we see a top here. And you've seen on Twitter, I've caught some short trades on it. I've also caught plenty of long trades on it. I just trade this one very short term. I don't hodl it. Okay, so I said earlier I don't hodl it, but I trade it quite a bit actually, and I developed some technicals to give me a quick edge on the scalping. So then I've caught lots of trades long and short. It's irrelevant to again to the project, and it's just watching price action. Okay. So again, it could top here. If we get below 8, we are definitely in this top. Okay, and the support level is 37 cents way down here. That may sound ridiculous to some people, but it's possible that we have a very shallow correction as well. Typical when you have a diagonal in equities is you get a very deep retrace. And so that 37 would be very, very typical. In fact, sometimes in equities, it retraces the entire range of the entire life of the diagonal, which for Link is its entire life. It has been in a diagonal since it started. So it's possible, but I don't treat supports like targets. They're just boundary levels. Okay, so we could easily just go to 290 if we drop below 8. We could at least go to 290 and then start to rally really hard, because the next degree on this, it's should be mapped out here. I mean, it's into the 4 digits. Okay, so I'm not a bear on Link, but it'll be a lot easier to trade if it can put in a good wave 2 and then set up for that stronger impulsive structure versus, and just get us out of this diagonal. It'd be a lot easier for me personally in my style of trading to trade it. But you know your risk here. I mean, there's a lot of holders on Twitter and aggressive on this one, high-fiving themselves for all this gain. Well, when I tend to see that on Twitter, that tends to be near top. Don't think that Link cannot top just because it's been strong so long. Okay, all it takes is everyone to be in on a chart and just not having much buyers left for any chart to top. Okay, doesn't have to be nothing. You don't need to have any bad news in the project or anything like that. You just need everyone bullish. When everyone's bullish, it's going to have to come down to find more buyers because all the buyers are already in. Okay, if you don't understand that concept, I would take a step back on markets and try to understand that dynamic that we find in sentiment. All right, so Link I think is great long term as long as it holds all the supports. That support level is all the way down to 37 cents. Near term, I've been watching a top. I don't see it as very high probability unless we break 8. It's pretty simple. If we can hold 8, we have a decent chance of a run all the way up to 90 to 100. Okay, in this run. Okay, so we'll just see what happens. Personally, I mean, I will be bond. You will find me on both sides of the trade quite often in this one until we have a bigger resolution. All right. Band. So this one I actually really like in terms of what it's done so far. I don't think it's a given that it pushes out this count, but it looks like it's possible that it could hit 10x from here with a target of 124. Okay, just based on the fibs. This is a perfect hit, or pretty close to perfect hit, in the region for the 1/3. That's in an ideal spot, and it seems to be setting up in a little nano fourth wave, 1, 2, 3, 4, for this heart of the third, we call it, the third of the third, the main third being here. So it's behaving right. If this one breaks 621, in fact, I'd rather it not break 735, then I won't be taking this perspective. Okay, it's very simple, just objective levels where this count invalidates. That's the nice thing about using Elliott wave counts. It's not that they always go through, but their invalidation points are very accurate. Okay, that's the big reason why I use this theory in trading. Okay, it's if it breaks 621, it will roll downhill. It's very simple. Where to roll downhill, I don't know, but it'll roll downhill. Okay, so that's what my take is on this. Maker is one that is even worse than Link in terms of probability. I mean, it's largely spent its life oscillating. You can see that here. Just a range, okay? Has no real trend. But I do find it interesting that we're getting, and this Y maybe is actually wrong. I need to, if it is going to be a Y, it's going to be there. But actually, then the A, B need to be move up as well. But more than that, I like that it's putting higher lows up against a very clear resistance level. And it'll be interesting to see if it breaks out. It may be some sort of larger diagonal that may even go into the 4 figures. But the problem is with this one is a breakout just jumps into unclarity. But it's interesting that at least it's getting higher lows up into that resistance area. We'll see if it gets rejection pretty soon here, again at that key level here at the white line top. where that I've got it marked Y. I don't know what that price point is. It's just a bit below 900. But it looks like it's trying anyway. So we'll see. Not one I'd aggressively trade, but it could get interesting at some point. COMP, this one, I get asked for it a lot, and there's just no structure to it yet. It's too young. This is a global average that I've got on this data set. Just, this possible to say this is 5 up and it's about to rally hard, but it's really not very clear at all. And I could just see this one as easily going to new all-time lows before it sets up a better structure, and we'll see what we get. So not much clarity there. Let's see, KYC. Looks like I didn't bring it up ahead of time. Bear with me. Oh, I thought I had it. Okay, we'll come back to that one at the end. Interesting. AMPL. This one is really, there's no clarity here, and I would say no bullishness. I mean, you can just look at it oscillating and now putting in lower highs, lower lows. I mean, this one just is one of those charts that just really could use a new all-time low to sort of reset and restart its structure. I would be no reason to take any long on that at all. Cava. This one may be forming this one gets one more wave up. I will call it a diagonal. Right now I've got it as an ABC. That's not, again, really not clear structure yet, but what would be nice to see is we'll do a quick fib pulls. If it pulls, if it pulls one more fifth wave out of this, I'll reorder the labels as a diagonal. Roughly about 70 cents would be support. Again, doesn't mean it gets that low after diagonal. It could hold the 382 retrace. And then we would look at an impulse that's much larger. And then the way this one has climbed from 34 cents to 9, well, holding a support in that region could launch it into 3 figures. So it could be a nice trade down the road, but it's just not determinable at this point. SNXs, I really don't like the structure so much, but I have a support level for this 5th wave, which right now would be a C wave because this is clearly a 3-wave structure. So we'll see if we get one more pop here. The problem is after seeing a large ABC like this, I don't know what we have. It could form a large diagonal, it could go to all-time lows, but there could be a trade personally if I could catch it in the 3 area. Which is the 3.8 retrace of this 3rd. That's a very typical area for if this pullback starts to get some headway for it for very lowest trade. So 304 would be the entry, 231 would be the stop, or just below that, and the target would be at least $13. So that's a 4x return if we get that pullback. That's about all I see on this. I don't see anything really long term that's nice out of this chart, but it could form something down the road that is worth looking at. See LRC. I'm watching this as having finished a diagonal. Support level is 305. Sorry, 0.035, so 3.5 cents. And if it holds that level, we could get to 368, which is an immense return. Liquidity is not very good, so sometimes liquidity masks problems. And I don't even see a top yet, so I don't know if the wave 1 is topped already. So I just have it labeled that way, but I just don't know. But support level right now is 3.5 cents if it does drop. And again, back to shallow versus deep, and we can always see a pullback to like 0.07. 8.5 cents is another area can pull back, but we just have to see structure. You got to see the pullback and see what it's like before you make any determination where to do your entry. So that's that. SXP, really ugly chart. I mean, it might give us a 4th and 5th within this channel to give us a leading diagonal, but right now, this is also equally odds that this breaks into new all-time lows. Seriously. So it just using the channel as support when you have this sort of structure. I don't use channels for impulses, but when we have a diagonal channels work very well, and this one just needs to see a 4th and a 5th, so we can get rid of the ABC structure and say, okay, well maybe this one has something going for it. Last one, ZRX. Before I find my KYC chart, this one is in the long term. This is one I've traded quite often. Is definitely a diagonal link, but has been very stubborn to get into this 3rd wave, and may finally be trying. In this situation, I'm estimating where the 3rd would be. Sorry, I'm estimating where the channel would be based on the ideal location of the 3rd. So that's a bit tough because it's not completed yet. But I would be using the bottom as a support level. Certainly break this level 2, which is our bear market low, which was early 2020. this one will come undone. So this will never happen if that doesn't hold. So just be aware of that. But if we can hold this, we hold a B wave pullback, and I see a very clear C waves really need to be impulsive ideally, and if we can get a nice impulsive setup for the C wave, we'll see. Now, one theme you may see too is that a lot of my charts are looking for tops locally here, personally, but I also have that take in Bitcoin that we have actually struck a top recently locally. I should have actually started this whole thing with Bitcoin, so we have our perspective on the crypto market, but basically I have a local top. As long as Bitcoin holds 9,600, then I'm bullish for the rest of the year. But if it breaks 9,600, and honestly, I'm not even going to give you odds. I think it's pretty 50-50. It may not feel that way right now, looking at how strong Bitcoin and Ether have been, that this market could come undone, but I put about equal odds. In fact, Ether is really not in a great spot in terms of where its extension is. So it's really Ether that says, hey, this market really could break down. They follow each other pretty closely to the T. So we'll see. But again, as long as 9,600 on Bitcoin holds, 216 on Ether, then and ideally 285, 287 on Ether, then I can be bullish for the rest of the year. So that's my quick take on the crypto market. Basically with Kyber, we've got a really ugly diagonal, and I've got all the structure in the back, which is unintelligible. And so and this is sort of a bit of a problem when you have to restart accounts after that, and you really haven't broken new all-time lows. But I am watching this diagonal. This is again, because of all of that, this is a chart I would never touch personally. But if we do fill out this diagonal by again holding this channel, let me extend this a little bit, holding this channel and then getting that fourth and fifth, then we would again mark support for a wave 2 pullback, and then look at a larger scale impulse. So that is that, and that's the last chart. So again, I hope you guys found this helpful. I'll take any questions that are reasonable in the except for I won't do any more requests, but in the comment box you guys can go ahead and give me some questions on any charts that I've reviewed, but I'm not going to add any requests to the set. But I'll take them in and look at them in the service if you're in there, and also again, if you want to try a free trial to the service, the link will be in the comments as well. All right, guys, we have a good week. I hope you guys have successful trading. Talk to you guys soon.